In conclusion of this video series, let's talk about the most popular indicators of market sentiment, used by traders and investors in the global financial markets. Also, I will show you the proprietary universal indicator of market sentiment called balance of power chart, which is based exclusively on the technical signals generated by the few of my strategies. Let's start with a definition. Sentiment indicators are graphical and numerical indicators, designed to show how a group feels about the market, business environment, or any other phenomenon. A sentiment indicator seeks to quantify how various factors, such as unemployment, inflation, macroeconomic conditions or politics influence the future behavior, or development of a given phenomenon, or an object. If we talk about the indicators of sentiment in relation to financial markets, it should be noted that they show the overall mood, or in other words, the degree of consensus of market participants regarding the future price behavior of a financial instrument. What practical benefits can be drawn from the assessment of market sentiment? Obviously, if you learn to correctly assess the level of optimism and pessimism of investors and traders in the market, then you will be able to make money on the market. For example, when the market is dominated by bullish sentiment, it means that most market participants are either already opened, or are preparing to open long positions, because they believe that the price will continue to rise. Accordingly, when the market is dominated by bearish sentiment, it means that most market participants are either already opened, or are preparing to open short positions, because they believe that the price will fall further. However, as you know, trees cannot reach the sky, or, in other words, market cannot be in a situation when all players are buyers or sellers. Therefore, at the first sign of extreme bullish or extreme bearish sentiment, traders should think about protecting his unrealized gains and maybe about opening a new position in anticipation of a reversal. Key market reversals usually happen when most financial analysts and advisors, 65 to 75% or more, are bullish or bearish. In other words, at the time when the vast majority of market participants recognize the presence of a trend, and wants to join it, at the same time, comes an end to this trend. Of course, there are speculative bubbles in the market as well, but still, it is not worth counting on them, because it is rather an exception to the rule, than a regular phenomenon. On the other hand, as you know, most of the time, estimates vary from 2/3 to 3/4. Market stays in a state of consolidation, or in a state of mild bullish, or mild bearish trend. For this reason, from the point of view of the market sentiment, it is more common for the market to be in a situation when the sentiment is either neutral, or mixed, that is, neutral bullish, neutral bearish, or equally distributed. In such market conditions, the preferred tactics of a trader is to identify a stronger group of players, bulls or bears, join them and trade in accordance with the rules of his strategy in the direction of the dominant trend. Thus, in order to understand the impact market participants may have on the financial instrument you are trading, you must determine the general mood of the market. In technical trading, the prominent representative of which is the author's methodology of trading a portfolio of strategies, the key principle is to study what people do, that is, price, volatility, open interest, and volume, rather than what they say. This, in turn, requires us to study market statistics. Most of the indicators of market sentiment are not only limited to studying the price dynamics of a particular instrument or index. What are the tools that can measure market sentiment? At present, we know quite a lot of different types of indicators of market sentiment. Moreover, in each type of the market, be it a stock market, a futures market, or Forex market, the indicators of sentiment are unique to these markets. Let's start with sentiment indicators used by the participants of the Forex market. First of all, it should be noted that Forex market is a decentralized market, whose members form a global electronic network of planetary scale. Unfortunately, it is quite difficult to create a universal sentiment indicator, reflecting the moods and opinions of all Forex market participants, because accurate and reliable information on the total number and volume of transactions in this market is missing. However, virtually every major broker offers its own sentiment indicators based on the information about the state of open positions and pending orders of the clients within the company. In my opinion, the most interesting tools for determining the mood of Forex market participants are offered by the brokerage company Oanda. Among other analytical tools available to traders, special attention should be paid to the Forex order book. Indicators of this group show the actual snapshot of the sentiment among the customers of Oanda, as well as indicate possible support and resistance levels for the major currency pairs and precious metals. Forex order book tool includes 4 blocks of information diagrams. Open positions ratios, that is the ratio of open long and short positions. Historical open orders, that is the historical performance of pending orders and open positions. Historical positions ratios, that is the historical performance ratio of open long and short positions. In order to get more detailed information on how to use this indicator of sentiment in your trading, please go to the appropriate page on the Oanda's website. Unlike Forex markets, the futures market is a more orderly, centralized market, with a single exchange and clearing system, as well as a government body that performs the functions of a regulator. The most popular indicator of market sentiment in the futures market is so-called Commitments of Traders Report, or COT report for short. This report is compiled on the basis of information provided on a weekly basis by several categories of market participants to the regulator of the American futures and options market. Its role is performed by an independent U.S. federal agency called the Commodity Futures Trading Commission, or CFTC. This report is published on the CFTC's official website every Friday. The COT report comes in 2 forms, only futures and combined, that is, with data on futures and options. You can see an example of this report on the next slide. This report divides all market participants into 3 groups. Non-commercial, that is large non-commercial traders, or, in other words, large speculators, who are various financial institutions, such as hedge funds, investment companies and banks that make money on price difference. Commercial, that is commercial traders, or, in other words, hedgers, who are large business using futures and options market to hedge and protect against sharp fluctuations in asset prices. Non-reportable, that is unaccountable positions, is a category of small traders whose open positions do not correspond to the reporting requirements of the Commission. For each group of traders, the report specifies the amount of long and short positions. In addition, for large speculators, the number of contracts that are in coverage, that is spreads, is indicated. Although different categories of participants hold different numbers of long and short positions, however, the sum of all long positions is equal to the sum of all short positions. This is the so-called open interest, that is the total amount of open positions to buy or sell. In addition, this report specifies change in open interest compared to the previous report, percentage of open interest for each reporting group, the number of traders in each reporting group and some other information. On the basis of this report, traders build technical charts that can be used for analyzing price dynamics of various financial instruments. More information about how to use this indicator of market sentiment in your trading, you can learn from the book called Secrets of Trading in the Futures Market. Act Together with Insiders. The author of this book is a world-famous trader and market guru, Larry Williams. As for the stock market, in its structure it is a hybrid market, which has both a traditional exchange, such as, for instance, the New York Stock Exchange, where the main trading volumes take place in strictly designated time with the participation of a specialist, and off-exchange electronic platforms, or electronic communication network, that is ECN, where trading volumes are slightly lower, but trading activity is not limited to the officially established time frames. Indicators of market sentiment used in the stock market can be divided into several groups. The most common of these are volatility indicators, such as VIX Volatility Index. Indicators of the options market, such as put-call ratio, market breadth indicators, such as AD line, and some others. In my opinion, the most interesting indicator of sentiment in the stock market is Fear and Greed Indicator, which is published on the CNN Finance portal. In contrast to the market sentiment indicators described above, this indicator is much more informative and versatile, because it covers several parameters of activity of market participants. On the next slide, you can see how it looks and its components. In conclusion, it should be noted that market sentiment indicators do not give accurate signals as to when to open a position. The fact that the indicator of market sentiment reaches its extreme value does not at all mean that a trader should immediately start looking for opportunities for buying or selling. Indicators of market sentiment should be considered as confirmation tools, indicating the preferred direction of the transaction. They can be used to decide whether to look for opportunities to open a long or a short position, but they will not tell you when to open a position. This question should be answered by traditional instruments of technical and fundamental analysis. It should also be noted that indicators of market sentiment are most effective on daily charts and larger time frames. And finally, I will say a few words about my own indicator of market sentiment. In the diagram below, you can see the balance of power chart, or, in other words, the technical indicator of market sentiment within a selected segment of the financial market. Here you can see the situation within the major currency pairs segment of the Forex market. Similar to this chart, it is possible to determine the balance of power between market participants in the precious metals market, energy market, as well as in certain segments of stock markets. Balance of power chart is divided into several sections, which reflect technical picture in the financial instruments from the perspective of the selected trading strategy. As you can see, there are long-term, medium-term and short-term sections, corresponding to the long-term, medium-term and short-term trading strategies. The W and L, that is winners and losers, section shows the alignment of forces on each individual instrument, while the sectoral corresponds to the total level of bullish, bearish and neutral sentiment within the selected segment of the market. Please note that in this case the level of bullish, bearish and neutral market sentiment for a given currency is determined in relation to the US dollar. That is, for instance, working with such currency pairs like Australian dollar versus US dollar, Euro versus US dollar, British pound versus US dollar, New Zealand dollar versus US dollar. Where the US dollar is the quote currency, you must remember that according to the balance of power, the prevalence of bullish sentiment over the bearish means the higher probability of rising rate of the base currency, and vice versa. After analyzing the balance of power between the market participants within the selected market segment, and after determining the financial instrument, which shows a noticeable advantage of bullish or bearish sentiment and provides a good opportunity for a trade, it remains to determine the technical parameters of the trade. In other words, it remains to determine the optimal levels for the position opening and closing, that could provide an acceptable level of risk and attractive PL ratio. On the next slide, you can see some additional explanations regarding the information indicated in the balance of power chart for the instruments of the Forex market. For those who like short-term trading and short-term binary options, the intraday market sentiment chart, which is built in analogy with the above-mentioned chart, can be useful. However, its underlying trading strategies include the following: medium-term multi-time frame strategy, short-term double-barrel gun strategy, scalping strategy, shuriken. For those who wish to use the indicator of market sentiment in their trading, I can offer a subscription plan for the balance of power chart in the following segments of the global financial market. To subscribe, please send a request on my website.